Hey everyone, welcome back to Corporate Decoder. Today we're diving into Brookfield Asset Management's latest 10K filing. It's a hefty report, and just like a complicated board game, it has a lot of moving pieces. But don't worry, we'll decode it together. Get ready for some serious financial insights. This year's filing, they've been busy shuffling the deck, mainly with the ownership structure. First off, this is their annual report, basically a year-end summary for investors. It covers everything from how the business is doing to potential risks. They filed it using Form 10K. Think of it as a school report card. This report card is for the fiscal year that ended December 31, 2024. That means everything we're looking at happened in that time frame. This is a tracking number the SEC assigns to Brookfield. Basically, it's how the government keeps track of the company's paperwork. Here's a key number. On June 30, 2024, the value of Class A shares held by non-affiliates was $16 billion. This tells us how much of the company is actually available to the public. As of March 7, 2025, they had over 1.6 billion Class A shares and about 21,000 Class B shares outstanding. Now, this just tells us about the structure of the company, who is the majority shareholder of what. Even though they're based in New York, they are eligible to file with the SEC as a Canadian issuer. It's just a funny thing due to legal reasons and some historical regulation stuff. There's also a tidbit about a voting agreement that was terminated on February 4, 2025. Turns out it was an agreement with BN related to electing directors, ended when BN transferred their shares. Now comes the part every company puts in these reports, a warning about forward-looking statements. Basically, they are saying, hey, we're making predictions about the future, but things could change. All right, let's dive into the meat of the report. First off is the business overview. They are a leading global alternative asset manager with over $1 trillion AUM. They operate in renewable power, infrastructure, real estate, private equity, and credit. It's like a financial five-tool player. They create value by raising more fee-bearing capital. They had $539 billion of fee-bearing capital. It increased by 18% in 2024. They are planning strategic M&A opportunities that would expand their capabilities. It means they are planning to do a bunch of buying of other companies. Here they outline 4 competitive advantages. First is operating expertise enabled by the 250,000 operating employees of their managed businesses. All those people work on their staff. Then global reach. They are in more than 30 countries, which they say allows them to diversify and identify a broad range of opportunities. They can move quick and put their money in different markets. Scale is another advantage. Over $1 trillion in assets under management and $539 billion in fee-bearing capital as of December 31, 2024. The last advantage is the Brookfield ecosystem, or the ongoing connectivity between all their managed assets that helps them identify new opportunities. It's a very sophisticated network. They make money by raising capital, then investing in high quality assets, then securing long-term financing for the investment, then enhancing the value of the cash flows with their knowledge, and then selling or refinancing. Let's check out their main product categories. The first one is renewable power and transition with $126 billion of AUM. They are a big player in the green energy world. They also have infrastructure coming in with $222 billion. Think things like utilities and transport. They are a leader in real estate, $271 billion of AU. Private equity is next with $145 billion China. Here they buy high quality businesses and essential services. And finally, credit, $317 billion. These are essentially loans and debt solutions for various companies. In February 2025, Oaktree closed their Oaktree Opportunities Fund, the 12th, with commitments of around $16 billion. As of the same month, it has more than $7 billion invested across the world and assets class. Scroll as at FAB December 31, 2024 scroll. Their fee-bearing capital represents the total capital managed by their asset management business, increased by $82 billion in 2024, reaching $539 billion. They changed their head office to New York, NY. They are officially a New York company now. They have a team of over 2,500 people. Their employee distribution is as follows: 25% based in the US, 15% in Europe, 3% in Australia, 3% in Asia. Managing risk is a big deal, and they have a dedicated risk management approach that's based on operating methods and a strong risk culture. They see sustainability as a value creation opportunity. They are committed to things like reducing emissions. Time to visit the risk factors. This is where they lay out all the things that could go wrong. Let's go over some of the highlights. The trading price of their stock is volatile and they can't predict it. That's stock market stuff for you. Political instability is another concern, especially since they operate in a lot of different countries. Political conflict, tariffs, and other trade policies have an effect. Catastrophic events like earthquakes or pandemics could hurt their business. Natural disasters and diseases can impact the movement of goods, services, and people and have a destabilizing effect. BN will exercise substantial influence over BAM. After a recent structural reorganization, BN owns approximately 73% of Class A shares. Now let's move on to the really important stuff, the financials. For 2024, BAM recorded net income of $541 million compared to $451 million in the prior year, an increase. Fee revenues is the growth in recurring cash flows from their asset management business, increased by 7%. Income tax expense was $438 million for the year, up from $417 million in the prior year. The tables show the fee-bearing capital, the total capital managed as at December 31, 2024, 2023 and 22, you will see it constantly increase throughout the years. Distributable earnings are used to provide insight into earnings that are available for distribution or to be reinvested. D increased from $2,096 in 2022 to $2,363 in 2024. It's generally good. Finally, to the financial statement. Here is all the information about all the money that is available. They talked about how they assess their financial risk and reporting. Here are some details on their director composition. They announced Bruce Flatt as chair and Mark Carney's resignation. Big leadership shakeup. Details on how the executive management is paid. Here is all the information about ownership. 73% is owned by Brookfield Corporation. Some countries do not want to be inspected. They disclosed a lot about the jurisdictions they are working in. They have cash of 12M, lots of assets and equity. This report is very detailed. The asset management business makes $329 billion and spends $1.68 billion. That makes for a profitable business. They have so many approvals and licenses, you need all that to operate a complex international business. They are committed to ethics, lots of compliance, always good end. So what's the final word on Brookfield Asset Management? They're a huge player in the alternative asset world, showing solid growth in ARM and fee-related earnings. That said, they do face risks from market volatility and regulatory changes. Also, a single entity, Brookfield Corporation, has majority control, so that's something to consider. Overall, they seem pretty well positioned for continued success in the asset management space. Thanks for watching. If you found this breakdown useful, give us a like and subscribe for more deep dives into the world of corporate filings. Let us know in the comments which company we should decode next.